I'm Jim Jubak, and welcome to this week's Quick Pick. Today we're going to do an update of my August 2021 pick of Cummins. And the reason for doing that is, well, let's look at the chart. We're looking at a high back in March of 2021 at 273 or so. And then pretty much, we've got some bumps up, but pretty much if you were to draw a line through this, you can draw a great technical line through all of the lower highs, and we're still putting in lower highs. And so we've lost about $50 a share in a little less than a year. So why look at this stock? Well, the question for Cummins and for investors is whether Cummins is ExxonMobil or Microsoft. In both of the cases of those two companies, you've got big sort of legacy cash flows. In the case of Microsoft, I would argue that they took the cash flow from the Office product and have turned it into an incredible business, investing in cloud services and such like. Certainly a very good place to be in the market. Exxon, on the other hand, is sitting there on all these legacy oil and gas resources that are churning out revenue. Everyone knows that at some point we're not going to be drilling, producing oil and gas at current levels. This is a diminishing resource, but as far as I can tell, they don't have a strategy for what to do with that cash flow. They're just trying to keep it going as long as they can. Cummins is a maker of diesel engines, which, like oil, is not a great place to be in the market. But they're the dominant maker of diesel engines. They don't make diesel trucks, they make engines for trucks. And one of the things about this is that if you're a dominant maker, you have a great big cash flow. And in fact, the cash flow is getting bigger as more and more companies that might compete with Cummins are looking at this and saying, hey, it's going to take a lot of investment to improve the fuel efficiency and lower the emissions. They're getting out of the market, giving more of the market to Cummins. And what Cummins is basically doing is saying, hey, we're going to invest that cash flow in fuel cells, in hydrogen production, in electric vehicles, and we're going to be the dominant engine company for those alternative ways of powering vehicles. And one of the things about that, again, competitors are looking at this and going, hey, that's a tremendous amount of investment we've got to make. We're not sure we want to do that yet. And they're really giving a kind of leadership, seeding a kind of leadership role in the next range of technologies to Cummins. Cummins is not doing well as a stock right now. We're down, about almost 6% over a year. We're down about 4% in a month. This is a stock that you need to be patient with, hold for a while. They recently raised their dividends, so they're paying a decent something while you sit there and wait. But this is one that I would look for if I was willing to stick it in a portfolio and save it for 5 years. This is Jim Jubak. Thanks for watching my quick pick for today. If you like this video, please like it. You can subscribe to my YouTube channel. That way you get notification of them all. Also, I've got my free site if you want more of me. 3 portfolios, including Cummins in the long-term stock portfolio. It's at jubakpicks.com, or my subscription site, which has got 6 portfolios, including some options work and ETFs. And that's at jubakam.com. Thanks very much for watching.